So without further ado, I would like to call onto the stage Dunne from Principal at Kreos Capital, Noel, co-founder and general partner at the K Fund, Sergio Pérez, director of Sabadell Venture Capital at Banco Sabadell, and Bruno Fernández of Enisa. So thank you all for being here. I think this is going to be really interesting, and I think you'll be able to provide a really good idea of what kind of financing options are available for companies nowadays. Instead of me introducing you all, I think you'll be much better positioned to do so. So I'd ask you all in like 2 or 3 minutes to talk a little bit about yourselves and also about your companies and what you do and what kind of financing you provide.
Sure.
Sean?
Shall I start?
Yeah, please.
So my name's Dunne from Kreos Capital, principal in the fund. We're a growth debt provider. So work in the European ecosystem coming in alongside equity. We like to pitch ourselves as potentially management's best friends in terms of dilution sensitivities. The fund itself, we're on our 5th fund. We've been around for 18 years. Invested something like 1.7 billion into the European venture ecosystem. The current fund's 400 million euros. We recycle the capital, so probably looking to invest around 600 million over the next 4 years into European venture companies and a little bit of Israeli tech as well.
Thank you. Ian?
So we are the equity guys. We do venture capital. We started a fund called K Fund. It's a 50 million euro VC fund, 50. No, we invest in digital startups in the Spanish ecosystem. So we basically invest in early stage, small amounts of money, in companies that have an MVP, minimum viable product, have small traction, first KPIs, decent percentage of growth. You can say about 15% growth per month in main KPIs. Doesn't have to monetize, maybe, Doesn't have to have a positive EBITDA, no financial, basics yet. It's basically engagement kind of metrics are very important at that stage. Global mindset, that's very important, and scalable business models. And we basically invest from 100K to 1.5 million in the early stage, valuations. I won't talk about that, but I won't talk about that stuff here. And what is really different, about our offer to the market, I think, is not the amount of money. Money is, a commodity, you could say. There's a lot of money, a lot of different options. What we do well, I think, is we add value, and I think it's very important nowadays. We don't only give the financial power needed in the company. We give support. We give engineers, designers, operations guys. We give people from marketing to provide little know-how pills, whatever is needed. We don't manage the company, obviously. We just give support. We contrast ideas, and we just accelerate stuff. And we make things happen. So I think that's what a value add we could give to startups.
Fantastic. Thank you very much. Sergio Pérez from Sabadell, what role do you guys play in the middle of all this?
In our case, we are a bank. We are Bank Sabadell, so we would like to be your financial partner. And we try to cover different stages of the chain. The first one is that we try to help you with different branches. We have 88 branches focused in startups, in entrepreneurs, that we try to think like you, not like a bank. So we are managing a different risk management to provide financial to the startups. The second step is that we are trying to help the startup since the beginning, since seed to startups, and we try to do that with equity. We invested from 100K to 1 million, and we try to co-invest with other partners, like people here in this table. We are looking like the others. We are looking companies with high potential, Spanish companies that they can grow faster than the medium. Okay, and finally we have the last part, but not least, is that we work in innovation. we work in open innovation that we try to bring the innovation to the bank. The startups, they can innovate faster than usually a big corporation like us. So we try to work with them, not only with equity and with financial, if not trying to test their ideas, if they can fit in products in the bank. So we are trying to cover all the parts in the value chain.
Okay. Thank you. Bruno, can you tell us a little bit about Enisa?
Yeah, sure. Well, I am the CEO of Enisa, which is a state-owned company attached to the Ministry of... Yeah, right? Yeah, okay. So it's a state-owned company attached to the Ministry of Industry, and what we try to provide is a financial instrument, which is a debt instrument, a participative loan. And there are certain characteristics that I would like to highlight. First of all, it's a long-term debt, up to 9 years, which is, we understand, a convenience period for developing the project. Second, we don't ask for any collateral. We just analyze the firm, and if we see that the firm has a viable project, we give them the loan, but without asking for any collateral. So it's the firm who serves as collateral itself. Third, the interest rate depends on the results of the company. So the better the results, the higher the interest rate. And we understand that this is a characteristic that helps the enterprise to finance the project. So what we try to do is to complement these private institutions, these private vehicles with a solution from the public sector, and we try to, with our instrument, foster this startup ecosystem in Spain.
Thank you very much. So at the moment, there's a number of different finance options for an entrepreneur to pick from. There's no shortage of money currently. Whether that will continue in the future or not, that's another discussion. But there are certainly plenty of options. What I would ask you is, at what point in the company's development should an entrepreneur talk to you? So exactly what kind of entrepreneur are you looking for? What's your sweet spot? And when should an entrepreneur go and talk to you instead of other options that are available? Let's go the other way around now.
So our loans, they rank from 25K to 1.5 million euros. So as Sergio has said, we try to cover the whole process. So in the case of startups, we have a specific line, a specific loan intended to give this financial to young startups, and we don't ask for any traction, for example. We just want that these startups, they have a firm. We don't finance, for example, people without a firm behind. So just 3 criteria: a firm behind, small and medium enterprise. Of course, we don't finance big enterprises, and they can act in any sector, but in the financial sector and in the construction sector. So they can come to us and ask for our funding once they have constituted the firm, and we are open to start this new project from the very beginning.
Sergio?
Okay. There are 3 entry points. The first one is the financial, because we have, as I said before, 88 branches around all Spain. So any startup can knock to our door asking for financial, and we are going to deal with them in a different way. Only to give you an idea, since January to July, we provide debt to the system to 21 million to startups. The second point is in equity. We try to cover since seed to startups. So we are trying to look for companies with the minimum volume product, maybe with a little of traction. And usually we try to cover the financial need from the company. So, for example, if a company needs $500,000 to reach another point of value, we try to co-invest in that round. So we usually don't lead rounds, if not co-invest with other partners to go to the next point. And the third point is our innovation. We have an open innovation department in which even if we don't invest in the company, if the company is related with any issue that is interesting for the bank, fintech, insurtech, or any kind of solution that can be interested for the bank, it's another entry point. Because maybe we cannot finance the company, but maybe we can have an agreement. And I always say that it's better to have a customer than an investor. So maybe you can knock to that door, and you can have a very good customer.
Thank you. Ian?
In our case, can you hear me?
No.
No? And now, in our case, we do lead rounds. You know, our sweet spot is from 300K to 1 million. That's the sweet spot. Ranges go from 100K to 1.5 million. That's in the first round. Then we do follow-on rounds. We keep on investing in the best performers of portfolio, up to 7.5 million euros. So we have a very high financial power for the Spanish ecosystem. In terms of business models we don't like to close ourselves or to focus ourselves into, we do fintech or e-health or tourism or edtech or whatever. No? We invest in the Spanish ecosystem. That means that a Spanish entrepreneur can be based in Spain, based in New York with engineers in Spain. You know, we would do both things. So we don't want to focus on verticals. We like to think in horizontal platforms, you know, software as a service, marketplaces, mobile, you know, those kind of platforms, no? Platforms, models that are scalable, you know, that are very low intensive capital in seed and Series A. And it turns nowadays every model is intensive in growth. You know, Sean knows about that a lot. Now tickets are very large in B and C rounds. So basically, what we do is we try to co-invest. We do a lot of co-investing with, you know, Enisa when it's seed rounds. We do small tickets from Enisa when it's seed rounds. We can co-invest with Banco Sabadell. We lead the round, and they co-invest with us. In fintech deals, for example, makes a lot of sense. And then, you know, what makes a lot of sense is to talk with Sean, you know, when companies have substantial cash flows, you know, in order to ask an amount of decent debt to accelerate growth and not have a lot of dilution, because dilution for us is bad as it's for entrepreneurs. You know, we want entrepreneurs to retain as much equity share of your companies as possible. You know, so terms and conditions are very sensible for both sides of the table, and that is a good instrument. You know, small tickets when it's that's my opinion at least. You know, this is a debate, brainstorming process, but debt from my perspective is very efficient in small tickets, in seed, you know, and in larger tickets from a Kreos capital when the company has predictable cash flows, no? And very well structured, such as Kreos, which are experts, no, in that.
Thank you, Ian. Appreciate the compliments. Yeah, I think I'd echo Ian's thoughts around the sector focus for ourselves. We're very much sector agnostic. Ticket sizes, we're everything from 1 million right through to 30 million investments. As Ian says, you know, we work very well for companies that are in the growth trajectory stage, whereby, you know, the dilution sensitivity is such, you're at a point in whether it's, you know, part of raising a capital round and you want a bit of additional top-up capital to extend the runway so you get to a valuation inflection point where you're actually achieving, you know, a far better valuation. Or simply insurance, so there'll be times where companies say, well, we're raising X amount of equity capital at this stage. We want to have the understanding that there's additional capital around the table that's committed, they can draw down. We can offer a window where they, you know, not necessarily draw the money straight away, but know they've got that capital committed and able to really put the foot in the gas, or not look behind, you know, in the revision mirror too much around ensuring that they're, you know, sort of running day-to-day operations. So yeah, that's, you know, where we see ourselves, you know, as a good partner for the likes of Ian and the equity funds. I think you just, you know, for a company, again, as Ian says, you just need to ensure that you're on the right sort of trajectory in terms of growth, because I think we work very well in that regards. It's not a you know, a lender of last resort solution. So it comes down to the merits of each business, but in those sort of circumstances, I think we can be a very good partner.
Thank you. So I'd just like to... Can you hear me okay? Okay, perfect. So I'd just like to ask you one final question before opening up to questions from the audience. Within your own kind of financing, be it venture capital, equity financing, debt financing, government-backed financing, what should an entrepreneur be concerned about? I mean, what should he be looking at when deciding between you and your competitors? And I'm sure you won't be biased at all, but what kind of signals and what kind of things should he be looking for? Because we just talked about the fact that it's not just about the money, it's just not just about the capital, it's about other things as well. What should an entrepreneur be looking for when he's trying to decide between you and your potential competitors? Sean.
I'll try to be impartial. Yeah. I think, particularly on the remit we look at, I think one of the most important considerations is looking at investor that's had experience in the market, that actually has seen a few cycles. We see people come and go in our space. Some of those funds themselves are leveraged. Our fund is purely equity backed, so we have a patient capital we like to pitch, where basically invariably you're going to have businesses that have some trouble along the way, and it's the very nature of the businesses that we're investing in. So you want to ensure that you've got an investor around the table that understands the ups and downs and can work with the companies to actually find a solution there, whether it's a restructuring discussion, a discussion with the equity investors, ensuring that this bump that the company may well hit can be overcome and we get back on the right trajectory. I think that's the most important consideration from our side. Yeah.
Thank you for your impartial view.
Yeah.
Ian?
So I guess, hello? Yeah. So my view there is, or my suggestion, or my advice to the market is how much risk you want to assume. No, between debt or equity, it's a matter of how much I want to dilute and how much risk I want to assume. No, I think that it's just two drivers for that decision. Equity means percentage of dilution. I won't talk about valuations, I will talk about percentages of dilution. In our case, we tend to start with 15s up to 25% of dilution for the team. Our equity is 15 to 25, maximum 25. We try to retain as much equity for the entrepreneurs as possible. Stock option plans of 10%, to retain talent. That's very important for us. So our option, the equity option would be, I give out a small percentage of stake, but maybe these guys can be able to help us bring an ex-CPO of an amazing global company that did amazing things, and they can help us in product, defining product, or hiring an amazing CTO, from Silicon Valley or New York. We can do that kind of stuff. And I would let go 20% of the company, but I will multiply by 10 or 20 or 30 the value in the next 5 to 6 years. So numbers do add up, It might make sense, Then we have to work together. Chemistry is very important. We are partners. We are members of the board or board observers, depending. So we have to be able to work together and to, to connect. It's like it's like having a marriage. It is, because we're going to be talking every week, every month. We have to, get along, and we have to take the main decisions together, like international expansion, new business lines, C-level hirings, debt emissions. To accept Sean in the company, we have to talk about it, I would accept you, in our company, but it's all about that. So it's marrying, with the equity guys. So my advice there is, who am I marrying with? It's always about entrepreneurs pitching us, entrepreneurs trying to sell their idea, their traction, their KPIs, their decks, having everything excellent. And I think that it's not fair. First time, I started this fund, so I've been doing fundraising myself with hundreds of investors, and I've been pitching them, so I know how it feels, And now what I do is I pitch them as well. That's why we kind of started doing giving out services or setting up a structure of operating partners and try to add some value because we have to add value to our startups. It's not just about the money, it's about adding value and helping and creating global companies together. So we have to pitch you guys as well. Actually, the best deals always, we are pitching them and making them or asking them to let us invest. That happens in the best deals, usually. Not always, but usually. So not only we do a due diligence to you guys, you should do a due diligence to us. That's very important. You have to ask us what we've done in the past, what value we added in the past to those companies. Specific questions about the value we will add in the future. What's the strategy of the fund? How much money we have reserved for follow-on? Because it's not the same if one fund invests a 300K ticket and they don't have dry powder strategy like we do to invest up to 7 million. Because if we don't do follow-on rounds, then that's a bad signaling for Kreos, for example, or for other huge VC funds that we will look. That VC fund did do follow-on rounds in you guys or not. If they didn't, they won't like that. So my suggestion is, accept funds that do follow-on rounds, because that's a very important signaling for future rounds.
Okay, so I think that the most important thing I'm following Ian is the feeling, because at the end, this is usually a marathon. It's not a 100 meters race. And there are good moments and bad moments. So it's important to feel comfortable with your investor, because at the end, you need to deal with them almost every day or every week, every month. And it's necessary to have good feeling to have the best decisions together. Regarding our competitors, I think that in our case, as a financial partner, I think that we can add value to the company in different ways. And the first one, and the most important one, is that it's very clear for us that we would like to be the financial partners. We are a bank, but we are a special bank. We would like to be the entrepreneur's bank. And we are working very hard to do that. So we have 88 branches, and we are growing every month to have more, because we would like to speak your language. At the end, when you are in front of a bank, they ask for the same. What is your balance? What is your revenue? And you have a startup, maybe 1 year old or 1 year and a half. So you are looking for your customers, you are looking to have phones, and you are focusing to growth. And it's difficult to say, I have a balance, I have 10 million in the account. If I have 10 million in the account, I'm not going to knock your door. So it's important to understand that we would like to speak your language. We speak the same language. We speak the entrepreneur's language. So we would like to be your partners in that area. In the second stage, we would like to follow with you. As Ian said, we would like to be your first contact, and after that, follow with you. We have equity. We would like to invest with you. We are not going to lead around like my colleagues, but we would like to keep working with you and provide, because at the end, this is like a game. When you are looking for a financial, for a equity, there are a lot of people who is looking your company. But at the end, it's very important who moves the first, because usually they are very venture capital that they are dealing with you, and until the first one don't say, this is my term sheet, this is my proposal, and after that, all follow. Don't ask me why, but happen. So it's like other things. And in our case, we like to be your partner, not only with equity, if not with financials. We will help you in that phase in which you need some money to ask these guys for equity, okay? And after that, the most important thing is customers. So if you have something that can attract to the bank, we would like to open the door of our house. Of course, I'm not going to say you are going to have a customer. No, because we are a bank, we have different departments, and our idea is maybe we are going to choose one option, or maybe we are going to choose another one. But we would like to be your colleagues. We have different people who understand what is an entrepreneur and what is a startup. So we don't want to work only with big corporations. We like to work with startups, and that is a change of mind in our organization. And we have done that. So we can help you as a bank in all the chain. So we can be very competitive, attractive for you, because we speak your language.
You have convinced me. Now, in our case, we want to see Enisa not as a competitor. On the contrary, we think that we complement perfectly your products. And I think the good news are that here you have 4 examples of instruments that can help you to start a new business. And you can find in the private sector and in the public sector a solution to make your business a better business, a success. We don't invest. That's an important question. We don't invest. We finance with this participative loan. We don't take any equity in the firm, and we want to provide these financial solutions to startups without access to the financial banking system, for example, because they are too young, they don't have any traction, and they have to wait a little bit in order to get this door open. We can also provide our financial instruments to those startups maybe too immature to be financed by these private sector capitalists. And at the same time, we can finance these startups who wants to diversify their financial instruments, so they can find us as a complement, as I've said before, for these private instruments. So we see us as a supporter of the startups with a public solution. And in this case, I think, as I've said, that the good news are that there is a huge and an important array of instruments in the Spanish ecosystem.
So I know that we have a microphone. Let's start with the Q&A. I think we have the first question over there.
Hello? Yeah, there you go. Thank you, everyone, by the way. I have 2 questions, one for Sean and one for Bruno and Sergio. The first question for Sean is, have you made any investments in Spain? And if not, are you committed to make investments in this geography? And the second question for Sergio and Bruno, would you lend money to a startup company that is not generating revenues? Thank you.
Sure. So our existing fund, our new fund, we haven't made any direct investments in Spain, but our previous funds, we've made several. So we're probably, say, probably half a dozen. So certainly looking at investments in Spain, very open to have those discussions. So please come and have a chat afterwards.
In our case, we evaluate what is the risk in the company, and the answer is yes, we can lend money to companies that they don't get revenues.
In our case, the answer is yes, definitely. And of course, if the company has traction, that's good for him and good for the company, and we see with better eyes the project. But we have a lot of projects without any revenues, and we have invested in those type of startups.
In my case, hello. In my case, it is mentionable that although I prefer always equity, to invest. We have a mandate that we are able to invest debt, convertible debt, and there are certain advantages to that. We push forward the discussion on valuation. We just give a cap, like a ceiling for valuation, and a discount over the next round, which most probably we will lead. So we're just, when companies have an MVP and the product is like amazing, it's always amazing, and the team is amazing, it's always amazing. And it's like, I'm worth like 1.5, and it's, or you guys say 4, and it's 1.5 or whatever. And we are like way too, convertible debt might make sense in order to, push forward discussion on valuation, and whenever the metrics bring that down or up, and it just makes things very clear. We can agree on a valuation and then apply the cap or discount, and that's it. But it's debt, you know. So
just to add to that. Yeah, just to add to that, I mean, we can also help in those sort of circumstances where the company's raising a X amount of capital and there's a dilution concern there, and you know, from the equity point of view, they want to set a valuation at a certain mark. We can come in as a blended capital solution whereby you're meeting you know, in the mid-mark around the valuation, so the dilution isn't such you know, an impact at that point in time. Also coming in on a convertible as well.
Another question. I think we had another question here. Let's keep it short and sweet. We're running out of time now.
Thank you. I have a question. I think some of you have already answered it. Does a startup has to be registered in a particular location for you to invest in it? Does a startup has to be registered in a particular location for you to invest in it?
So we're multi-jurisdictional. I'd say the requirement for us is EU businesses, but we can do the rest of the world. I'd say probably 80%, oh, probably 70% of our business is EU. Probably 20% is actually in Israel. We have an Israeli office, so we do quite a lot of Israeli tech where companies going across the US. So we also look at the US and other parts of Europe as well. So
in our case, we can invest. Hello, yeah. So in our case, we can invest all over the globe, but there has to be, the companies have to be part of the Spanish ecosystem. So founders can be either in Spain or in Israel or New York or Silicon Valley, but there has to be part of the team or a relevant part of their strategy based in Spain. We need, it has to make sense they're asking us for money. Because if they're in Silicon Valley, and there's like Indian guys with Indian engineers in Silicon Valley, why the hell are they asking us in Spain for money? You know, we were like, you know, the last ones. It makes sense to us for money. So we need to be able to help them. It has to make sense for them to ask us for money.
We do usually the same because in the seed or startup, we need to add value to the company. So we need to be close to them. So it doesn't have sense for us, for example, to invest in a company in UK, even if it's a fantastic company, but not in equity. It's different, for example, if we would like to work as a bank with the company. But to invest or to give a loan to the company is needed to be near to us.
Yeah, same answer.
Unfortunately, we've run out of time. Having said that, I think all of the speakers will be around for a while, so feel free to talk to them and ask any questions. I would like to thank all of them for their time. I think this, thank you very much. I think this was a really interesting panel. Thank you everyone for being here. That was it. Thank you.